Right, a quick look at the Asian markets before we get on with trade. As far as our markets are concerned, it's mostly in the green after the Dow rose nearly 200 points, led higher by financials in the US and also the midterm elections. So the Japanese index, the Nikkei, up about 0.9%. We've seen some weakening on the dollar yen, not just today, but over the last couple of weeks, where it was trading at around that 111 to 112 handle. From there, it has now weakened to about 113. Good news for Japanese exporters. However, the other indices also showing a fair amount of green on the screen. The Korean index should come up for you, opened in the green and now is holding up with a gain of about 0.5%. The Straits as well as the Taiwanese indices too. The Straits is the one which is sitting with a sharp cut, about 1.5%. However, the SGX Nifty for our markets, remember yesterday was a slightly choppy, subdued sort of session. From then on, our markets are indicative of the fact that maybe 10,600 is on the cards. That is what the SGX Nifty at the initial uptick is indicating. Should come up for you on your screen. There you have it, about 10,600 on the SGX Nifty.
Okay, well, let's tell you about Wall Street then. US markets ended on a mixed note, with the Dow Jones and S&P 500 rising, while the Nasdaq was pressured by declines in Apple as well as Amazon. But the big cue to watch out today will definitely be the US midterm elections, which will take place later tonight. CNBC's Meg Terrell gets us a wrap of all what took place on Wall Street.
For CNBC TV 18, I'm Meg Terrell. U.S. stocks finishing the day mixed. The Dow adding 190 points, the S&P up 15, and the Nasdaq off 28. Shares of Apple are under pressure again today, falling nearly 3% over more concerns about weak iPhone demand. Apple warned last week when it reported quarterly results that holiday sales would likely miss estimates. Meanwhile, Lowe's announcing plans to shutter 51 underperforming stores in the U.S. and Canada by February. The move comes as part of new CEO Marvin Ellison's turnaround plan for the home improvement retailer, which has trailed Home Depot in sales for years. Lowe's operates more than 2,000 stores in North America. And Amazon is reportedly planning to split its new headquarters between two different cities, according to NBC News and the Wall Street Journal. The much-anticipated announcement on where the e-tail giant will build its second headquarters, dubbed HQ2, could come as soon as this week. Amazon had originally said it'll invest $5 billion and employ 50,000 workers in the winning city. According to the Wall Street Journal, that investment would be split over two winning cities under the new plan. And that's the action from the U.S. market. Back to you in Mumbai.
Okay, well, the US midterm elections are scheduled to happen later today, and many market watchers say it could send ripples through capital markets depending on what the results are. Here's some opinion from Citi and JP Morgan on what they're expecting.
I think it's going to be a bit of a non-event from a market's perspective, quite honestly. I think there's going to be more focus on the trade wars and on Iran than the midterm elections. But what we found in looking at geopolitical risk is that some of the best hedges are not the ones that people think actually have been the conventional wisdom. Like, we don't think it's gold. We don't think it's the yen. It's really been to be short equities, short U.S. high yield, and also to stay long vol. Tax reform, which was comprehensive, actually already went through and is already in place. So some of the things the market will focus on is, risk of a government shutdown. I think there's skepticism, given the size of the deficit, that you can really do more deficit spending for infrastructure, and that even for tax reform 2.0, that might be difficult to proceed.
One of the things that really struck me is how little conviction everyone seems to have going into these midterms. Midterms are always harder to poll and to model than national elections, and these midterms are not inspiring partisans, certainly, with the likelihood that their side's going to win. We are pretty much aligned with the street in terms of expecting a split, but what I have really emphasized is that investors need to be prepared for the plausible outcomes and not just think in terms of a base case and a tail risk.
All right, and across the Atlantic in Europe, the European markets ended mostly lower. Actually, they were fairly unmoved as far as the close is concerned. The DAX was down by about just 0.2%. We had the CAC down by about just 1 point. The FTSE 2 mildly higher. It was the banks which were under pressure after the latest results of the European stress tests on Friday, in which the UK banks fared the worst in the test due to macro risks associated with the Brexit. Meanwhile, Eurozone finance ministers have now gathered in Brussels for another meeting, and the Italian budget plan for 2019 is set to be the talking point among ministers. So the one index that really underperformed was the the Italian index down by about 0.6% in an otherwise ambivalent sort of European markets. And out there, they were lowered, or they were led lower by the Italian banks.
Okay, well, on to the big exclusive then. Former RBI Governor Raghuram Rajan says RBI is like a seatbelt which helps avoid bad accidents. Speaking to Lata Venkatesh, he adds that the central bank must solve liquidity issues by putting liquidity in the market.
If generally when there is a liquidity problem, the central banks try and solve that by putting liquidity into the market. That means lending against high-quality paper. That means lending to high-quality institutions so that they have the capacity to on-lend if there's necessity. If that is done, I think the central bank has primarily carried out its function. If there's further money needed because entities are severely undercapitalized, or because they have losses on their balance sheet, or because markets distrust them and refuse to lend to them, then we have something which is different from a liquidity problem. We really have something which looks much more like a solvency problem.
Okay.
In that case, I think much closer examination is needed of the particular issue. And certainly some of this can be remedied, as I said, by companies going out and issuing equity to bolster their balance sheets. If the market value is still significantly positive, it is possible. And if even the equity markets are close to them, then at that point, which is very far from where we are, a bailout could be contemplated. But that bailout has to be carried out by the government because ultimately taxpayer funds will be involved.
There is a severe disagreement between the government and the Reserve Bank on the liquidity issue for the following reason, that 11 banks have been put under prompt corrective action with three filters, either because their capital is not up to the Reserve Bank's requirements, or because they have higher net NPAs than 6%, which means they've not provided for their NPAs enough, or three, because they have negative ROA. Now, the government's position has been globally prompt corrective action is resorted to only with a capital filter, not with net NPAs and ROA filters. What would you say is the correct position?
Look, I don't, again, want to enter into the specifics of the debate. Let me tell you broadly that I think there is a little bit of a misunderstanding in this debate about what the RBI is supposed to do. I think the analogy, Dr. Viral Acharya gave the analogy of T20 versus test match. But let me give you another analogy. The RBI is something like a seatbelt. As a driver, the driver being the government, it has the possibility of not putting on its seatbelt. But of course, if you don't put on your seatbelt, you get into an accident. The accident can be quite severe. So most drivers listen to that annoying noise which comes when you don't put on your seatbelt and actually put on the seatbelt because they know it's for their own good. And historically, the relationship between the RBI and the government has been precisely this. The government wants to focus on improving growth, and it does all it can within the limits set by the RBI, which are set based on financial stability. So the government will try and get the RBI to be more lenient. And there were innumerable letters, both from industry as well as government, which came across my desk saying, please relax this, please relax that, please relax something else. And the understanding was we would examine that in close detail, see what the risks to financial stability were, and then say yes or no. When we said no, the government understood this crossed the Lakshman Rekha in some sense of stability, and that we would be held responsible. We have responsibility for financial stability, and therefore we have the authority to say no. They would respect that and come back the next day with another letter saying, what about this, what about that? And we'd keep examining all these possibilities. This has always been the relationship between the RBI and the government. And if you recall, I think there was this anecdote by Dr. Subbarao when he talked about this phone call between Dr. Reddy and Mr. Chidambaram. And he was listening to Dr. Reddy's side, and Dr. Reddy said, no, 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 and finally said yes. He said, what were you saying? He said, well, Mr. Chidambaram was asking for this and that and something else. And I kept saying no. So why did you say yes? He asked me at the end if I could hear him. And I said, yes.
Okay.
So,
Yes.
I mean, that's the notion of the relationship between the RBI and the government. Of course, the RBI doesn't say no out of petulance. It says it because it has examined the situation and believes that this implies too much financial instability.
Okay.
I think that relationship has gone on for long. And, you know, the fact that the RBI says no is not new. Now, the government can keep asking and say, please consider this, please consider that. But at some point it says, okay, I respect your decision. You are the financial stability regulator, and I back off.
Interesting anecdotes coming in from Dr. Rajan there. Do remember to catch the full exclusive interview with Lata Venkatesh at 7:30 a.m. today, and small bits throughout the course of the day.